I'd like to take the opportunity now to introduce the credit team. Josh, Andrew and Hung, I'd invite you up. The credit business, as most of you know, emerged out of some wonderful opportunities that we identified during the GFC. Unfortunately, markets have improved somewhat since then, but Josh and his team are continuing to identify some great investments, and invite Josh to say a few words.
Credit team and I are very pleased to have achieved a return for the last financial year of 12.83%. This return's been made up of two components. 7.26% has been returned to clients in the form of distribution or reinvested into the fund as per their instructions, with the remaining 5.57% coming in the form of capital growth in the portfolio over the financial year. And whilst we're very pleased with these returns of 12.83% for the last financial year, what's particularly pleasing to the team and I is that since our inception, over 3 years ago now in February 2010, we've achieved an annualised performance of 11.49% for our investors. So in a funds management industry which is dominated by large players, sometimes offering relatively generic investment opportunities to their clients, it's worth taking the opportunity to ask why we're different at River Capital. And how is it that we manage to consistently outperform our larger peers? We believe it's a rare combination of capabilities wrapped in a small boutique funds management firm which allows us to achieve this. First amongst these, our capacity to look across markets, not only Australian dollars. Many of our investors and many of our competitors in the Australian market are constrained to investing in Australian dollar denominated securities only. In the credit world, Australian dollar denominated securities represent only about 5% of the investable universe. At River Capital, we have an ability to look at other currencies such as US dollars, sterling or euro, and hedge those currencies back into Australian dollars, thereby eliminating the currency risk and immediately enlarging the investable universe from which we can choose the best risk-adjusted returns for our investors. Secondly, among these capabilities, is our ability to focus on best ideas, which we believe is our value add. Most of our competitors in the market are constrained by a mandate which dictates to them that at any point in time, they must have a certain percentage of their portfolio invested in a given industry or sector, regardless of the value that they see in that particular industry or sector at that point in time. At River Capital, we focus on the best ideas, regardless of which industry or sector they reside in. And we have a capacity to remain flexible. Flexible not only in our ability to look across markets and currencies, but at the moment and consistently we hold a high weighting to floating rate investments in the fund as well. This means when and if interest rates in Australia increase again, our investors will not be hurt by this and will actually be able to profit from higher interest rates. On this graph here, I've illustrated one of the investments which we made in the last 12 months, which perhaps best exemplifies our points of difference. These are two securities that were issued by Origin in 2012 at roughly the same time. These two investments have the same risks, the same structural features, same level of the capital structure. The only real difference being that one was targeted at retail investors denominated in Australian dollars, and one was targeted at institutional investors on the wholesale market denominated in euros. The retail targeted Australian dollar denominated investment is still available to clients today, offering 6.9% per annum. River Capital, we're able to access the bonds trading in euro, hedge them back into Australian dollars, eliminating the currency risk and achieving for our investors, after all fees, a return of 8.9%. It's an additional 2% we're capturing for our investors for no additional risk. Another investment we've made in the last 12 months, which has performed very well for us, was an investment in Alinta Senior Secured Loans. Andrew Lally was a senior portfolio analyst overseeing Alinta, and I'd like to introduce Andrew now to speak a few words on Alinta.
Thanks, Josh. Just wanted to quickly make 3 points on Alinta, an interesting investment we made 8 months ago. We actually bought the loans back in December of 2012 at a discount 93.5 cents. They were paying 9% interest, and it's about to be fully repaid next month. It's going through a refinancing at the moment. So it's going to deliver 7% capital gain as well as the 8 months of interest that we've collected. So over the 8 months, it's made 13% total return. So I think the interesting thing is, why was that possible? Why is this a unique opportunity? And I think the core is that it had undertaken a material restructure. So it had gone through 3 years of new management, new ownership, a completely changed strategy, and also a restructuring where you saw gearing drop by half. And I think the market really had mispriced that restructuring. So River, through the industry insight, but also that bottom-up fundamental valuation process that we go through, was really able to capitalise when banks and other investors were still thinking about the name and the history and not really the insight and valuing the company. I think the other point to make is really that in total we invested 37 million in the context of all of our credit funds under management. 37 million is quite a large parcel in terms of credit markets. And on top of that, just the demonstrated ability that we've shown to be quite nimble with large parcel sizes is really starting to foster those broader discussions. So we've got banks and other borrowers really coming in now and making contact with us. So I think our reputation is really starting to grow.